How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for the data that was recorded on January 19th, 2021. We're going to start again by taking a look at gold and examine what the institutions are doing with their positions. So this set of data represents this price action right here on the weekly chart, and as we can see, they continue to take profits on their long positions. Remember, back on January 5th, 2021, they had positions as high as 349,000. Now, since then, they took profits, reducing them from 349 to 313, and now this next week's data tells us that they continue taking profits on their long positions from 313 to now 307, so that comes as price was dropping. Now, if you take a look at short positions, we can see that they've slightly been reduced as well, 72,000 down to 60,000. So they're reducing longs and they're also reducing shorts. There's a reason why they do that on both sides, and we'll go into that into more detail with the members only video. So let's move on and take you over to oil. What do we see with oil? Price was consolidating at the highs. What did they do with their positions? They closed longs from 692 to 664,000. That's quite a dramatic drop there, okay? So they're taking profits on long positions, and what do we see with shorts? They're also reducing their shorts. Again, they're reducing both sides, and there's a very specific reason why they would be doing that. So price is rallying up just like we have forecasted for quite some time now, and we do expect more upside in the next weeks or months to come. Now we have the US dollar, and price was rallying up on the weekly chart. As it was doing that, the institutions increased their longs from 13,000 to 15,000. At the same time, they also increased their shorts from 27 to 29,000. Now this is interesting, because if you focus on what they've been doing with their short positions, you'll see that over the last many weeks, they've increased their shorts quite dramatically, and this began where? Right when contracts expired. Contracts expired, and they used that opportunity to build a very strong short position. Now, mind you, they have been dropping price, and that's one of the reasons why they're building a strong short position. But now we are sitting inside demand, so why would they be maintaining a very strong short position while we are inside demand? Well, we do believe that there's going to be more downside in the near future. It'll take some time for it to play out, but what we're seeing here is very representative of a future drop in price. Look at the coloration of the cells here. They are bearish, and here, okay, net positions, very bearish, and that is not changing. So that's a good sign for a continued move lower. Let's take a look at the Aussie. Aussie price was consolidating after removing some supply, and what happened with their long positions? They just closed off some of their long positions, not a lot, but just a small portion, and then they increased some of their short positions. So they haven't done much. All right, it's pretty neutral. You know, if you take a look at the coloration here, you know, back in this area was more neutral. Over here is a little bit more bearish neutral, right? But at the same time, we still have that neutrality. So I want you to also take a look at this. We got the sentiment was somewhat bearish here, and now we're going back to bullish. So there isn't a strong direction in terms of their positioning right now. There is no strong sense of whether or not they're going to continue pushing price higher or lower. What we are noticing when we're doing our analysis is that we have massive supply that is in play on the Aussie. So the tendency will be for price to drop, and so we are expecting a move to the downside. That will be somewhat short term to mid term, and then longer term we are expecting more upside, the potential for more upside. We're looking for very specific trade signals that will notify us if price will indeed over the longer term head higher. So now we take a look at the USCAD. USCAD, one thing I will point out is take a look at the bearishness here, okay? They were somewhat neutral, and have been for quite some time, and now we're starting to see some bearishness. So what are they doing with their positions? Price is consolidating here at the lows, and they increase longs from 31 to 33. Not a big deal. Short positions hardly adjusted. This is interesting. Why? Because we are seeing a lot of evidence to suggest that there's going to be reversals in the market. So price has been moving down for quite some time here on the USDCAD, so a reversal would be a move to the upside. And so far what we're seeing in terms of the positions would support that. US Swiss franc, not doing much with long positions. They closed some shorts from 20 to 17, closing shorts at the lows. Not a bad idea if you think that price is going to rally. In other words, there's not really much there to look at. You know, we've got a little bit more neutral feeling here, okay, as compared to where they were not too long ago. And that does also support the potential for a rally. Okay, so now let's go over to the euro. This one's a nice one. So what do we see with the euro? Euro dropped, and they increased longs from 228 to 236. At the same time, they increased their shorts from 72 to 73,000. Based on the ratio of the movement, long exposure remains at 76%. But we do have net positions increasing from 155,000 to 163,000. Now remember, we have supply in play here. Remember what we've been talking about in terms of the movement that we've been seeing in price over the last many months, and the potential for reversals. So we're seeing that big drop that took place on the weekly chart, and we're seeing very strong evidence to suggest that there's going to be a continuation of that move. Pound, the increase longs a couple weeks back, we're at 45,000, which is good. At the same time, shorts are not doing much, which is important to point out. Cooled off. So the focus here is on longs, obviously. And if we take a look at the coloration of the cells here, you can obviously see that there's a touch of green in there, meaning they are bullish, and also net positions is suggesting that there are bullish as well. But we've got to be very careful, because in terms of the other markets, we're seeing potential for reversals, and that will hold this one down, if not bring it down with it. US dollar, Japanese yen, longs are very cooled off. Shorts are the aggressor. They're not making any major moves at this point, so there's not much to see here. Last but not least, we have the Kiwi dollar, and we can see supplies in play. They increased longs from 26 to 27 as price dropped, and they increased shorts from 11 to 12. Bottom line is shorts are cooled off. That gives a bullish sentiment here. They've been increasing their longs. That's why the big rally. Time for some profit taking? Potentially. Okay. Since contracts expired, they reduced their longs from 34 to 28, and now we're at 27. So they haven't been doing much in the last few weeks, but then again, we just contacted supply. So we could see some profit taking on long positions, and that would fuel a drop to the downside. Alright, that is your CFTC data and analysis for the data that was recorded on January 19, 2021. If you have any questions, you can reach us at www.whiteoakfx.com. Thanks, and have a great week. Take care.